G'day folks, welcome back to another update. Today we're looking at Bitcoin and Ripple. Now there's still a downside risk. A lot of people are pissing themselves because they had a new high on the Bitcoin price. But just be cautious, there still is a bearish divergence still in play, even though the price is edging higher. Now I'm not saying you shouldn't invest in Bitcoin. I'm just telling you there could be a short-term risk to the downside opportunity if that's what you're being very cautious about. Before we go any further, make sure you hit that like and subscribe button to support the channel. Also, we did a video recently for natural gas, which was a +1 video, which shows the strategies we're going to cover today. So if you want to get a deeper dive into the strategies, reference that video, links in the description below. As of today, August 15, Bitcoin institutional demand, regulatory clarity and policy tailwinds like 401k crypto inclusion are fueling its record-breaking rally, surging past 124,000 recently. With institutional ETF inflows soaring and global adoption expanding, analysts forecast targets ranging from $130,000 to $150,000. Although short-term volatility remains a risk, as I'm saying. Raising the bar, Nasdaq's Citi emphasized that broader adoption and ETF demand are now the key drivers shaping Bitcoin's valuation. For Ripple, XRP is gaining fundamental strength, lifted by the SEC's dismissal of its appeal and legal clarity that paves the way for US adoption. Rising interests as its RLUSD, Ripple USD is a US dollar-backed stablecoin, ecosystem expands alongside supportive macroeconomic and regulatory conditions, fuels bullish momentum and setting the stage for possible breakouts above $3.40 to $4, even $5 long term. So looking at Bitcoin first, again, we always look at the long-term trends. And if you want to get a deeper dive, again, go into the +1 video, which I did recently for natural gas, which goes into the detail more succinctly. But here, again, we've got the weekly, the daily, and the hourly. So if you're trading on the daily, we go in the direction of the weekly. So here you can see the weekly is broken above the moving average of the CCI1500 and also the moving averages of the price chart. Now notice we do also have these little blue areas. They're fair value gaps, and you can see there the price retraces back into those areas more frequently. Even the one back here, it retraced back into there. So what we look at doing if you're trading on the daily, and notice back here as well, we had a bearish divergence, and that's still in play actually. So I'll extend that trend line to that point there. So lower highs on the CCI versus higher highs on the price. In fact, it's gone to that level. So that's still a bearish divergence on the weekly. So again, be cautious. We might see a decline in the near term. This could take months to play out actually, so it's not going to happen overnight necessarily. On the daily, we've got another bearish divergence, slightly lower highs on the CCI there versus higher highs on the price. And that has actually bounced and actually just broken through that previous resistance at 123.225. And what we're going to do is move that to that new high as a new resistance there. Now, since then, the price has retraced back to the downside, approaching this moving average. Again, notice as well, the CCI has already broken into that moving average range. So if you're trading on the hourly, we go in the direction of the daily. So here at the moment, if you're trading the daily, we go long, but avoid going long when the CCI breaks into that. Go back to this one for a moment. You would have gone long during this period, and you would have closed out the last trade when the CCI broke into that moving average range on the daily if you're trading the daily. Now, if you're trading the hourly, you would have gone long with a CCI break above there, along with that candle there on the price, and that equated back to this area here on the hourly, and you would have closed out each of those areas when the CCI broke into that moving average range, and then re-entered when it broke above on the price and the CCI again. You could have averaged down during this period as long as the daily was going long, or you could have closed it out with a small loss. I'll let you decide your risk profile. But at the very latest, again, if you had gone long there, you would have closed it out near the high of that candle. You can see there when the CCI broke into that moving average range there, you would have closed it out near the high of that price range. And that would have been if you're trading on the. Again, avoid going long during that period. Go long again when both the CCI and the price break above. Close it out, or if you want to average down, if you're following the daily trend. And the last long position you should have held was when the CCI broke into that moving average band, again at the height of that price near there. Now since then it's been declining. The price has pulled back towards that moving average on the daily, and the CCI has already broken into that moving average range. So avoid any long or short positions until we see a more decisive move on the daily if you're trading on the hourly. So let's assume we were trading on the hourly. This is the daily chart, and what I've got here marked going long during this period when the CCI broke above the moving averages, and so did the price. I marked it with a green arrow. You would have closed it out once there, and near the top there, you would have made a little gain there, then re-entered again there. and possibly closed it out again, you would have probably a little loss there, re-entered again there and closed it out there. So during that period, that would have been long positions. You would have then avoided going short because the price is still above the moving average here, even though the CCI was down here, and you would have started going long again or short at that point there when let me mark that, when the CCI and the price broke below the moving average. That's where you would have gone short. So let's go to the trading strategies. So here, I know it's a bit busy, but bear with me. Again, these are the three strategies. I won't go into detail of the strategies. Reference that +1 video to get the detail of the trading strategies. What I want to emphasize here is going long and going short on each of them. So here, for example, on the CCI14 strategy, you would have gone long there based on the daily, as I've marked with the arrows. You would have let it run, and you would have closed out once that CCI on the daily broke into that moving average range. So you would have closed it out there at that little point there. You would have made about $4,500 in return for Bitcoin. Notice there as well, on the same period for the multiple moving average, you would have had one trade there. That would have made $290. And back here on the CCI350 strategy, that would have made $476. Now again, go to the +1 video to get a breakdown of the strategies and how they work and what risks are involved in each. Now notice here, you don't let it run through the whole period, because with the averaging down, this one actually used up all of your, assuming a starting point of 100,000, your funding balance, that would have used up all of that balance. This one did okay, again with a lot fewer trades, again lower risk but also lower returns, and this one eventually relies on the price adjusting and going higher. This one here as well, likewise didn't do too badly, only had one trade so far. In fact, it had a few trades, it's hard to see in there, but had a few trades in there, and that still reaped a few nice rewards. So again, that's this bottom chart here. It shows you the long positions. The top chart here shows you going short. Now the first one, the CCI14, you would have gone short from that point according to the daily. You can see there, and you would have stopped it out at that point there at the very latest, and you would have made a small gain there going short with 3,700. This one didn't have any entries. Again, go to the +1 video to understand this trading strategy here. This is the multiple moving average strategy that had no entries for going short, and the CCI350 strategy, again going short at that point, you would have had a small gain there, closing out with about 4,600 in terms of returns. So that's for Bitcoin. So for Ripple, on the weekly, you can see there it's broken above the moving averages, but notice it's starting to create a flag on the price. The CCI is actually pretty much in that moving average range, so it's a neutral positioning. So neutral means avoid going long or short. It's as if you're trading on the daily. On the daily, if you're trading on the hourly, that's showing a short position. The price is broken below the moving average range, and so is the CCI. So taking short trades only, and that's indicated here by the 1 hour chart. The other thing we need to look at is for any divergence, and there's no divergence here on Ripple that I can see. Now, going to the strategies, here we've got, again, the CCI14 strategy going long during that period, and then going short. Now, again, going long according to the daily. Let me just go back to the daily for a moment and draw the entry parameters. So you would have started going long. Let's go back to this point here. Around about this point here, you would have started going long. So when the CCI and the price broke above the moving average band, let's make that a green arrow, just to make it distinct. So you would have gone long there based on the daily, and you would have closed it out right at the top there, near that, oops, put that there, copy, right at the top there on that candle there, you would have gone, just closed out your long positions. Now since then you would have gone short. Let's just mark another point here, copy it. You don't go short at that point, you go short once the price breaks below the moving average band, and also the CCI is below there, so you would have gone short there, and you would have closed out that short position, copy that, to when the price broke in that range there. So that would have gone against you, and you probably would have then followed the hourly trades to manage that. So let's look at what that looks like on the 3 strategies. So here on the 3 strategies, what we've got here, the CCI14, you would have gone long during that period, and you would have closed it out right at that point there with a small gain, and that gain was about $84 for Ripple. Now this is trading one contract or one share. Okay, so you're going to multiply it by number of shares you buy. You would have avoided going long during that period and avoid that drawdown. Until such time you would have gone short, and I've got it marked up here. You would have gone short, and again you would have closed it out once you saw the hourly break higher and following the moving averages on the hourly chart. So you would have got out somewhere in that range there with maybe a small trade, a small gain. On the multiple moving average strategy, you would have gone long. Again, very minimal, actually no trades in that and no trades in going short. So again, very minimal entry parameters, meaning no trades made for that one. So again, very conservative but low returns and low opportunity for trades. And the CCI350 strategy, going long during that period, you would have made those few trades and closing it out there, going short, making about, that one generated about 136,000 with your baseline as 100,000. And then going short from that point, so even though you've averaged down there, you would have got closed out at that point there, you would have had a small loss. So you would have been down almost about $70. So remember, to get a deeper dive into the strategies used, go to the +1 video we did recently for natural gas, links in the description below. Thanks for watching, hit that like and subscribe and support the channel, and we'll see you in the next video.